the beginning of a double-dip recession.
The Australian real estate market is about to go through a big change, thanks to a complicated dance of economy and market trends. A lot of different things are affecting this upcoming change, such as changing interest rates, property prices, and the number of homes for sale. As we take a closer look to the world of real estate, it's important to know how these changes affect both current landlords and people who want to buy a home. So without further ado, let's dive right into this analysis to understand how the Australian real estate market is set for a double-dip downturn. It is the Executive Director of SQM Research, Louis Christopher, who is at the head of this analysis. Based on a lot of study and knowledge of the market, his ideas show that the real estate market is getting ready for a double-dip recession. Based on a careful study of market trends and economic factors, this prediction says that in 2024, the average price of a city in the United States could go up or down by 1% to 3%. However, this change that seems to be moderate hides the fact that it is not happening in the same way in all Australian towns. In this situation, Perth and Brisbane stand out as special players, and prices are likely to go up there. The good news for these two towns comes from the fact that the Chinese economy is getting better. Price hikes like these are likely to be caused in large part by the expected high demand for base commodities like iron ore. This study shows how global and local economies are linked, showing how changes in one area can have an impact on another. On the other hand, towns in Australia like Sydney, Melbourne, Canberra, and Hobart might not be as lucky. The prices of homes in these areas are expected to go down a little. The main reason for this adjustment is that housing is becoming less affordable, which is made worse by ongoing interest rate hikes, which SQM Research now sees as being at restrictive levels. The economy is expected to slow down, which makes things even worse for these home markets. Before we move ahead, why don't you take a few seconds while I speak and show us your support by subscribing to the channel. And now, we can get back to the topic on hand. So, the strong performance of Australia's real estate market, which was once helped by growing population and a lack of new homes, is now facing new problems. Even though these factors help the market, rising interest rates are likely to make house prices go down. As we look more closely at how this market works, the way these things affect each other becomes very important. Interestingly, new data from the Commonwealth Bank of Australia, CBA, shows that it's getting harder and harder for people to pay to live in Australia. In October, home prices across the country had hit or were very close at all-time highs. Prices have gone up. The mortgage payments are now the most expensive they've ever been, in all but Brisbane and Perth. This puts more pressure on homeowners. The usual home price in Sydney is an amazing $1.090 million, which is 5.1 times the average dual-income household's annual income. This is a much bigger increase than the national average of 3.6 times. We also have CoreLogic's executive research head, Tim Lawless, who points out that the rate of home value increases has slowed down significantly. The year-to-date rise was 7.2%, having reached a high point in May with a monthly gain of 1.5%. Even though a 10% gain for the whole year is still possible, the momentum seems to be fading, especially since the Reserve Bank recently raised interest rates. Adelaide and Darwin have a more stable future, with property prices expected to stay the same or go up or down by a small amount. Even though things are stable, this doesn't change the fact that the real estate market is going through big changes and problems. The economic indicators Christopher uses to support his argument are very important. His most likely outcome for the Reserve Bank's cash rate to stay between 4.1 and 5%, population growth to slow down to 460,000 or less, and jobless rates to rise to 4.5% to 5.5%. These predictions are very important for knowing how the real estate market works, because they have a direct effect on buyers' ability to buy, and on how the market feels overall. This is also a worst-case scenario that Christopher describes. In this scenario, there will be an ongoing energy problem, persistingly high inflation, interest rates rising above 5%, and unemployment levels exceeding 6%. In this case, home prices across the country could drop by up to 3%, and drops would be bigger in places like Canberra, Hobart, Melbourne, and Sydney. But even with this less positive outlook, Perth and Brisbane are expected to keep going up, showing how strong they are in the face of bigger economic problems. These changes can also happen in the rental market. Australia's renters are in for a rough year, because prices are likely to go up by 7 to 10% next year, and even more in Perth. This prediction shows that the housing market is still having problems, with supply problems and population growth pushing rents up. Sadly, there are many effects of interest rates going up. Apart from making mortgage payments higher, they have other effects on the business, such as lowering the amount that can be borrowed. According to studies from Rate City, the ability to borrow money to buy a house has gone down by 30% since the RBA started raising interest rates. This drop in the amount that can be borrowed, which for the average user is over $200,000, makes it even harder for people to afford to buy a home and could slow down the market. Rate City's research director, Sally Tyndall, said that even with these problems, there is still a lot of demand in the market and not enough stock. However, this situation is more likely to cause the housing market to slow down a bit than to completely crash. The sale clearance rates, which are a key sign of the market, have also been going down. Lawless from CoreLogic says that auction clearance rates have dropped to about 62% across major cities in the past few weeks. This is down from a low of 70% in the middle of 2023. This drop happens at the same time that more homes are being listed for sale, and it takes longer for houses to sell, which is another sign that the market is cooling down. Christopher writes a warning note about the effects of increase in interest rates over the past few years. He says that these price hikes will have a big effect on landlords and people who want to buy a home, which will cause a lot more people to sell their homes in bad shape, especially in New South Wales. This trend shows that the market is changing. Because of the stress on property owners' finances, more homes may be put on the market in less than ideal conditions. Also, PropTrack data shows that there were a lot more new listings for homes for sale in all of the cities the last month, which backs up these predictions. This rise is especially noticeable in Canberra and Melbourne, where the number of listings has gone up by an unusually large amount during the busiest selling season of the year, spring. The data also shows that different major city markets have changed over the past year. For example, the number of new listings for sale went up a lot in Sydney, Melbourne, and Canberra. A top economist at PropTrack named Angus Moore gives these trends more background. He says that the number of homes for sale listed right now is not unusually high, but rather normal after years of few sales. Vendor trust has been boosted by things like better selling conditions, more certainty about interest rates, and price growth across most of the country this year. In rural areas, things are a little different. The number of sales has gone up, and the number of new listings in regional places is up both month to month and year to year, but the number of regional homes for sale is still well below what it was before the pandemic. This shows how hard it is to keep supply and demand in balance in these places. In this way, the Australian real estate market is at a turning point. The next year is going to be a time of big changes that will have different effects. For similar content, don't forget to check out some of the other videos on your screen.